Good day, all. Welcome to the channel Afropreneur, where we focus on doing business in the African continent, from Cape to Cairo, from Dar es Salaam to Accra. Today, I will be discussing about buying a company versus buying a business. I have observed quite a number of acquisitions by people of African background of existing and large companies, which then fell within a year or 2 years of their acquisition. Now, there is a fundamental difference between a company and a business. A company is a separate legal entity which is established to conduct business. Now, business is or are activities which a company or an individual do in order to earn or to generate revenue or an income. Now, a company cannot exist without a business, but a business can exist without having a company. The difference which I need to emphasize here is that usually when people are buying a company, they focus on the assets. What does the company have? Buildings, machinery, equipment. But they do not focus on the intangible assets or the going concern part of it. That is, does it have purchase orders? Does it have long-term contracts? Or is there a market for its products? Or is there a market for its services? Or how is the environment which they are operating in going to be affected by the things which are happening currently? Now, the companies which I have observed, which have been bought, are very big companies with a very big balance sheet. But they fail because the people fail to analyze in their due diligence how competitive are their products and services, or is there a market for the product or service, or what is it that we are bringing in to this company? What business? When I'm talking about a business, what is it that we are going to exchange for cash? What is it that we are going to offer other companies, governments, or the general public? What we give them, which product, which service, so that they can give us their hard-earned cash. Now, majority of these companies, after they are bought, they start to struggle with maintaining the assets, the machinery, rentals, long-term contracts, lease agreements, because they do not have the business. One thing which needs to be emphasized is if an individual or an organization is selling a company, you have to look at what is it which is causing them to sell it. What is at the core of them selling or disposing that business? Is it because of poor management? Is it because of market share? Is it because of their products and services which are no longer competitive? That is the fundamental thing which one has to understand. Now, you look at yourself, what business do I have? Why would I buy this company, which is these assets? Why do I need these assets? Are they going to be useful in converting my raw materials into a product which I can exchange in the market for revenue and income? That is the main thing which you are supposed to focus on. Do you have what it takes to make that company profitable? Now, sometimes it's better for you just to start with the small equipment, small machineries, and avoid big acquisitions, big machineries, whose leases or whose rental or the financing part of it might be more than what you are generating, or will end up giving you a lot of pressure on your performance or causing you to liquidate. Now, when a company is being sold, The owners have already done their calculations. They know the business, especially if that company has been in existence for a long time. They usually sell because it's not performing. And what is not performing? A company's performance, usually it's its capability to generate revenue or to generate an income. So sometimes the majority of the income and the revenue is not enough to cover the fixed costs, to cover the long-term leases, to pay for the rent and the remuneration of the employees. Now, it's not good for you to buy such a company, especially when you don't have a strategy to increase the revenue of that company. Put yourself as a person who's going to be employed by that company. Are you going to sacrifice to live where you are currently employed to work for that company? Put yourself in those shoes. Is it going to be able to pay you a revenue? Is it going to be able to pay you a salary? That is the main thing which you have to look at even before you buy. Because when you buy, it's even worse. Sometimes you go and borrow. Sometimes you use your savings. Sometimes you liquidate some of your assets in the acquisition of that company. But at the end of the day, you see that you are going to have problems. So my advice, from my understanding, is you have to understand the business part of an acquisition of a company. And as well, look at what is the advantage, what are the current or competing technology, equipment, and machinery of what this existing company has, and you measure it against you buying a small equipment which can fit or suit the revenue which you can obtain from that company. Well, sometimes a revenue of 1 million is enough. Sometimes a revenue of 1 million is not enough. It all depends by what resources are you going to use to generate that revenue, and what expenses are you going to incur in providing that service or that product to the market, which is your salaries, your rental, and general operating costs. These are the things which you have to focus on before you buy a company. But it will be good if you have got a good idea, if you have got a product or a service which you are going to bring in, and you already have got contracts, you already have got purchase orders to execute. This makes it even simple for you to do that. So my advice to my fellow Africans is, please do your evaluation. Don't just buy assets. Don't buy equipment. Don't buy buildings which a company is owning. But look at buying the business. It's better you just purchase the POs. Let's say a company has got POs which generate a profit of 1 million. It's better for you even to buy those POs at a discounted price and give them cash, give them 600,000, so that you know you have got something to work on with that 400,000. Because if you don't do that, you end up being an example of other failed African acquisitions. Thank you for watching and enjoy the rest of your day.